Good morning, this is Connor from 0DTE Traders here to present our market minute for October 15th, 2024. It is 10:40 and the SPX is trading lower, down 0.4% to 58.35. The trend remains up, but we did find resistance here at yesterday's high of 58.70 this morning. And, well, we've been drifting lower ever since, and now volatility is starting to pick up on the downside as mega caps turn lower. Meg's down 1.5%, Nvidia down nearly 6%. We are coming into a decent support here. This is an upsloping structure. 58.30 is the put wall and entry into yesterday's gap. Now, a break opens the door to gap fill at 58.15, implied low just above that at 58.17. Followed by 5800, which is more significant support on the downside. As far as the upside goes, major resistance that we're looking at here today is 58.70. A break implies an outside day with the possibility of continuation to 5900, although that is looking not very likely today given conditions, but you never know. Things can change quite quickly. In terms of market internals, ADD plus 600, volume difference 1-to-1. And again, what's really leading the downside here, weighing on the SPX, is the underperformance in growth mega caps. So something you want to watch closely here. In terms of volatility, VIX up 1.7%, but is not straying too far from that 2019 handle. And this is the reason why. Wednesday marks VIX AM expiration, and there is a high concentration of open interest at 20 and 19. And the flows associated with these options have been keeping volatility pinned to this region over the past week and a half. Post-option expiration, these options will be removed. The flows will be removed, allowing volatility to move a little bit more freely, whether to the upside or to the downside. Going into option expiration, there is dealer incentive to have the VIX settle below the 20 handle, as this would require all these calls to expire worthless. The VIX 20 strike has the largest call open interest at 256,000 contracts. In terms of combined calls and puts, the maximum pain level is 19. Maximum pain is a concept that refers to the price level at which the most options, calls, and puts expire worthless, causing maximum loss for option holders and gain for option sellers. It's just a target price the underlying asset may approach as expiration nears, reflecting where option holders feel the most pain. Taking a look at our gamma charts, the gamma index remains positive, 900 million notional, trading above the flip of 57.70. That is our transition. So we're still technically in the buy the dip regime, although it is fairly mixed below 58.50, so the market does lose some supportive flows in that range. There are two standout strikes on the call side, 58.85, 58.90. Two standout strikes on the put side, 58.35, 58.30. And this is a result of a 0DTE strangle. This is something we see periodically. We saw this twice last week around those volatility events. There's about 13,000 contracts, open interest at these levels. Now, historically, this trade has constrained price movement, suppressed volatility, but it is worth monitoring as whoever put this trade on is anticipating volatility expansion one way or the other. And as of now, we are seeing a bit of a bounce off 58.30, but a break would most certainly be a bearish indication. If you'd like to learn 3 option strategies that our traders use to generate consistent profits with 0DTE options, along with a repeatable process on how to trade these strategies effectively, join the team at 0DTEtraders.com.